Rosenblatt analyst Barton Crockett joins us. He's got a buy rating on Apple and Amazon. Let's start off talking about those. You know, it's funny, Barton, I'm reading some of your notes about Amazon. They're ramping investment in Anthropic that might help the optics, giving them a big LLM to run on their services. Empty calories, you say, though, self-funded revenue lift. You also go on to say that there's some obvious weakness there as well. So I guess you don't sound like a man who loves Amazon, even though you have a buy on it.
You know, I have a buy on it. The stock has done, decently. And, it's a large company with its arms in a lot of places. And I think on balance, you should own Amazon. I do think that AWS has not really been accelerated by AI. But that could happen, probably will happen. They have been losing share in AI, I think, to Azure and to Google. But I think that can improve as they improve their capabilities. The biggest kind of support for Amazon right now has been this tremendous margin story. So it's almost like whatever happens on the top line, the margins have been so strong that it's an incredibly powerful, compelling element to that story, and that almost outweighs the rest of it.
Yeah. The reason we think of Amazon, at least at this time, is, of course, because of e-commerce. Does it even matter anymore? Does this holiday period, does it still move the needle for Amazon, and is it of importance?
It's very interesting. Amazon has, we believe, decelerated to a place in e-commerce of growth basically in line with industry averages. The fastest growth in e-commerce from scale player would be Walmart right now. And Amazon's not growing as fast as Walmart right now. So, at one level that could be concerning, but the margin expansion has been so powerful that it's hard to really worry too much about that. And e-commerce is still outgrowing, by a few percentage points overall commerce. So it's still a growth story. And then you have these new elements factored in on top of that with advertising, right at the forefront. So that's enough, we think, to keep Amazon interesting and to make its stock one that you want to own on a relative basis at this moment.
What about Apple as a holiday shopping play?
Yeah, look, we do believe that Apple is not really a holiday play. We do think that the iPhone growth will be accelerated as they roll out more broadly and more impactfully their AI features. But that's a next year story. This year, gratified that their, demand has been as stable as it has been, given the changes and their slow start in AI. But we can look forward to a better day to come. And we do believe that the stock will anticipate that. We think it has anticipated that. And we think that makes Apple, also a stock that you want to own here, but not for holiday sales, really for next year.
Any concerns about Buffett selling so much of their Apple stake at Berkshire?
Not really. Clearly, he's a great investor. Clearly, he's not perfect. And clearly, he has his own particular kind of situation that may not be everyone's situation. So, yeah, you look at that, you notice it, you say he's a smart guy who's been very successful, and he's lightening up after a terrific run. But, I'm not looking at my stocks relative to when Berkshire Hathaway got into them. I'm looking at them relative to where you want to put money today. And I do believe today Apple will benefit from an improving story into next year.